In this video, we're going to talk about the 5-minute Bollinger Band scalping strategy in Forex. Stay tuned. Hey traders, a very warm welcome to you. I hope your trading is going well. Alright, on the screen in front of you, we have the pound US dollar. Now, this trading strategy specifically, let me adjust it so it fits nicely in your screen. There we go. This specific trading strategy is all about scalping on a 5-minute chart. Now, the rules of this strategy are you can use this on cable, i.e. pound US dollar. You can use it on euro US dollar. I don't see any reason why you can't use it on others, but this is a strategy I have researched. I'm just sharing with you guys, but we'll pick it apart in a minute. Let's talk about the actual rules of it. So pound US dollar, a euro US dollar, 5-minute chart. Using a Bollinger Band with your standard chart settings. So in this case, I've got it on 20 period, which is normally a standard for most charting packages. 20 period, 2 standard deviations. Pretty good so far. Now, the rules of the strategy state, and this is very much a scalping strategy, so for day traders out there who love trading currencies on an intraday basis, the rules of the strategy state that you're looking for a flat Bollinger Band. So a flat Bollinger Band, if you know about Bollinger Bands, is going to be when literally price is pretty quiet. It's in a range bound environment. It's not breaking to new highs. It's not breaking to new lows. It's just sitting there. It's plodding along back and forth, double top, double bottom, and you'll end up getting a nice flat kind of band, as we have with this little area I've got here. Let me just get my drawing pen out. So you're always almost going to get that in a range band environment. Price is going to be doing back and forth, back and forth, back and forth. You're never going to get a sort of breakout type of thing. So that's what we're looking for. You're looking for that sort of environment. So the first thing that springs to mind for me is going to be, if you're trading pound US dollar, it's going to be kind of early hours of the morning, right? When UK is still asleep, America's going to sleep. Anywhere where there's probably not going to be much money flow coming in, would expect a range bound environment. Not always, but this is literally what came to my head when I thought I'll pick something if we can see how this strategy works. So that's the idea of the strategy, looking for a flat Bollinger Band. Okay, the rules of the strategy are when price touches the upper band, you go short with a 10 pip stop. When price touches the lower band, you exit the trade. That's a short trade. When you're going long, you go long when price touches the lower band with a 10 pip stop. And then you exit that trade as it pushes up to the upper band. So those are the rules. Let's just jot them down and then we'll look at what's going on. So we're long our lower band with a 10 pip stop. If I can type, pip. And we're short upper band, 10 pip stop. That'll do. Just so we've got this in our head when we're looking at this. Alright, so let's have a look here. So I'm in the middle of the night here, approximately about midnight. Where would we be going short with this strategy? We're in a 5-minute chart, correct. We're in a pound US dollar chart, correct. We've got a Bollinger Band on here. So we'll be going short around here, it looks like. If we look at the price there, I'm calling that 1.3269. So it'll be about a 7.9 stop, right? So a 10 pip stop will be kind of up here, if I'm not mistaken. I think so. So that's going to keep us pretty much in the trade, and our exit is going to be down here, and that's going to take us out at 6.0. So we've got like a 9 pip target on that profitable trade. 10 pip stop, we're in that one. We'd go long again there, and our stop's going to be 10 pips below. Our target's going to be hit here. Now, interestingly, I wonder if we would have been stopped out if we'd taken this one short here. Would not be stopped out. However, you know, I never really tagged that lower Bollinger Band, and if strictly speaking, I suspect you would have to come out if it came back up and tag the upper Bollinger Band. There's no details about what you do if you don't get a fill. I guess this is kind of just a fundamental basis of the strategy for you. So let's look at pros and cons. I like the theory of the strategy, right? I like the fact that we're in a range bound environment, so you filter that with a flat Bollinger Band. It makes a lot of sense to me. 10 pip stop is quite arbitrary. As we see, it can be quite wide. If you're in a really range bound environment, it's not going to be that much, is it, guys? You know, if we zoom out and we put it in perspective, it's not a lot. So you might want to kind of one little adaptation of that strategy might be, I would suggest, is saying, okay, what's the mean of the Bollinger Band? What's the 20 period showing you? And use that as a stop above. So you take that level from there to there, whatever that is, extrapolate that there and have your stop there if we were going short at this point here, if that makes sense. So I think that's a better way of kind of adapting for volatility as opposed to an arbitrary 10 pip stop. Taking targets makes sense to me. I think I like the idea of that. I guess you probably might want to do something that says, okay, if it kind of gets to halfway over, maybe if it gets to the mean or something like that, maybe I'm going to start trailing then, so I'm not giving back any profits, something like that. I think, but overall, I think it's not a bad little strategy. Let's have a look at Euro US dollar and see if we can find a kind of example for it there. Maybe something a little bit not quite as fine tuned. Is that a flat Bollinger Band? Probably not quite. Let's have a little zip along and see if we can find something that reasonably fits the criteria. Again, don't forget we've got to have a flat Bollinger Band. I'm going to call that a flat Bollinger Band here. It's reasonably flat. You'd probably say, okay, it's flat. I'm going to start to take it around here. Do you get stopped out on that? Not if you're using the 10 pip rule. You're getting a profit there. You're going short again there, you're taking a profit here, you're going long again here, and you're probably getting stopped out unless you've got some sort of trading strategy. So, you know what, it's one of those things. I quite like it. I found it. I thought I'd look at it. It's interesting to me. I think it can be refined a little bit further. But you know what? And also I think you could probably use it on indices and some commodities as well. I don't think it's restricted purely to Euro US dollar or pound US dollar. I think if you find something that's range bound, it's a great way of kind of filtering, making some boundaries around the trade, short the highs, long at the lows, adapt that stop a little bit. I don't think the arbitrary 10 pips is quite right. Adapt it a little bit, and there's not a bad basis for a decent trading strategy on a 5-minute chart for you scalpers out there. Anyway guys, stay tuned for the next video. Dig down into some more trading strategies. Take care. Bye bye.